Today we're going to be talking about what is a 2-1 buy down, when it makes sense and when it totally does not. So if you like this content, hit the like. If you haven't subscribed, subscribe. If you totally hate me, hit dislike. I feel like the 2-1 buy down is the best mortgage marketing that I have seen in decades. And look, 2-1 buy downs have been around forever. So it's not like it's anything new, but it's hot in this market. And the reason it's hot is rates have jumped so quickly, it is not palatable to buyers. So it's freaking you guys out. And a 2-1 buy down makes you freak out less. To be blunt, I'm just gonna be blunt this entire video. Unless the seller is paying all of your closing costs and for a 2-1 buy down, it does not make sense, okay? So first let's talk about what it is. So let's say the going rate right now is 7%. So the way a 2-year buy down works is you have to qualify based off of 7%. Year 1 of the mortgage, your payments are based off of 5%. Year 2, they're based off of 6%. And year 3, they're based off of 7%. Okay, and you're like, Jen, why would this not be the most amazing thing? Guys, the fees to do a 2-1 buy down is the same as the difference in the payments. So the money, the difference between 5% and 7% year 1, you're paying for that up front. The difference between 6% and 7%, you're paying for that up front. Okay, that's why I said if the seller's gonna pay all of your closing costs and the 2-1 buy down, cool, because they're basically just subsidizing your mortgage payments for the first 2 years. Now, if you're the one paying for this is where it doesn't make sense to me, because all it is you upfront paying to get those lower rates, but you're upfront paying exactly what the difference is. So you could you could do your own 2-1 buy down by just paying the difference from your own bank account instead of doing it up front this way. And what drives me nuts about it is I don't know how many people are being blunt about the actual math behind the product. You know, it is much sexier to say like, hey, your first year is 5%. I can't even say it, I almost threw up, I'm sorry. Your second year is 6%, and then you're at 7%. It's a 2-1 buy down. Yeah, but guys, they're charging you the difference in the payments up front. So it's kind of like prepaying a big chunk of car insurance, right? So that you get slightly discounted payments, you know, and they're not even discounted, you just already paid them up front. That's what it is. Okay, I know I'm gonna get at least 25 lenders that are like, you suck, it's a great product. Yeah, it's a great product for you guys to make people feel more comfortable about where rates are. But like in theory, if it's your own money, right? Just pay the difference out of your own bank account, keep control of the money, or use the money to actually buy down the rate for real, right? Not like fakesies, not like fakesies, right? Use your money to buy down the rate for real. If you've got the seller paying all the closing costs and the 2-1 buy down, I would still be looking at what it is for real. Now, the reason a lot of people are banking on this program is they're like, look, rates are likely to go down in a year or 2 years, right? Because seriously, how long can they stay this high? And we'll refinance them at this point. They're never really gonna feel the pain of the 7, okay? And in theory, that is plausible. But once again, guys, it's not a discount. You're just paying the difference in the payments up front. That's all it is. So questions, comments, do you love the 2-1 buy down? Do you hate the 2-1 buy down? What do you think of the 2-1 buy down? Feel free to weigh in. As always, I'm licensed in 48 states, everywhere but Rhode Island and Utah. I am happy to help you guys with your mortgage. I will always be really honest about what these products are and when they can help you. So once again, if the seller's paying all of your closing costs and a 2-1 buy down, cool. Awesome, have fun with it. But if this is coming out of your own pocket, you could do this with your own bank account. You could look at buying down the rate, and it doesn't necessarily make sense. So just keep all of this in mind. Questions or comments, please feel free to reach out.